On individual stocks then, Dr. Reddy's is one of the stocks which will be in focus today. There's good news for the company as a US court has ruled in favor of the company to relaunch the generic version of Suboxone in the US. Ekta, what does this mean for the company, the size of this in their overall scheme of things?
Well, it's important to actually huge drug addiction problem. So there is a requirement for for a lot of these drugs which actually fight drug addiction in the US market, and these drugs have actually become one of the most highly prescribed drugs in the US, which is basically Suboxone. So now what happened for Dr. Reddy's is that they had purchased this particular drug some time ago for around $70 million. They had managed to get US approval all the way back in June of this year. And because they received US approval, they launched the drug. However, at that point in time, they had a litigation which was pending with Indivior, which is basically the innovator of the drug. And they still have a litigation pending with Indivior at this point in time. But they launched the drug in any case. So it was an at-risk launch. So there was a possibility that it could work against them. Now, that's exactly what happened. There was the Indivior, in fact, filed against Dr. Reddy's at that point in time. And there was a permanent injunction which was put by a US court on Dr. Reddy's selling Suboxone. So they sold it, I think, for a day or a few days. And within that period of time, they managed to make up to around $10 to $15 million in terms of sales. So you know the kind of potential for that particular drug. Now they went to the US court, they appealed against that permanent injunction. And what has happened is that the US court has ruled in favor of Dr. Reddy's and said that I'm lifting the permanent injunction and you can launch the drug again. So again, what this means is that Dr. Reddy's will be launching the drug again for the second time in 1 year at risk, because the primary litigation is still ongoing with Indivior, but that's probably going to take around 1 to 2 years in order to see the light of day. It's a $750 to $800 million drug for Dr. Reddy's. They could possibly make up to around 50 million in the remaining part of FY19, and some estimates are going up to 120 million in FY20, FY21. There is competition from the likes of Myelin, plus maybe plus there is another drug which does the same thing with a lower dosage. So there are those kind of competitive scenarios that you're working with, but Dr. Reddy's, most definitely, it's an opportunity for them.
All right, most definitely an opportunity for Dr. Reddy's. The ADR was higher in trade overnight. Let's see how that stock reacts in today's trading session. But another company which will be in focus has been on top of the banking investors' mind for a very long time. Yes Bank will be in focus. The company has released a statement citing resolution could be on the cards between Rana Kapoor and Madhu Kapoor. Ritu Singh is here with the details. Ritu, good morning.
Well, good morning, Manglam. This is a very late-night statement released by Brahmadat, who's the chairman of the NRC committee at Yes Bank, and Rana Kapoor, really in an attempt to mitigate, some of that pressure that the stock has been reeling under after news that 3 board members had resigned in under a week. So the statement really says that efforts are underway for a mutual resolution between the 2 co-promoters, Rana Kapoor and Madhu Kapoor and her family. And this resolution was to ensure better support and coordination with the board of the bank. And this is really the first time that Rana Kapoor has publicly acknowledged that, since that fighting between the co-promoters began, that they are looking at some sort of a resolution. Further, the statement went on to say that the 3 board resignations would bear no impact on the process of selecting a new MD and CEO. And that process is on track as per committed timelines, which as per the bank is sometime around mid-December, when they hope they can shortlist at least 3 candidates. The search and selection committee for the same is scheduled to meet next on 12th of December to discuss the final shortlist for the new MD and CEO appointment. And right after that, the board of Yes Bank will be meeting on the 13th of December to take suitable action, one on replacing 2 independent directors that have resigned, also to evaluate a new chairman for approval by RBI. Remember, this is after Ashok Chawla, who was the former chairman, resigned from Yes Bank. The board in that meeting will also seek a review from the search and selection committee on the progress of selection of the new MD and CEO. And this is really to reiterate the commitment and the solidarity, in the words of Rana Kapoor, of the board of directors towards Yes Bank, and to address some of these concerns that were recently raised in the media following the resignation.
Okay, all right, Ritu, thanks very much for that. So Yes Bank continues to be a stock in focus, but rating agencies are divided over the Reserve Bank of India's decision to extend the timeline for banks to meet capital norms. Moody's believes the move is credit negative, but CRISIL is not too perturbed by the deferral.
Clearly, for banks, the more the capital, the better it is. And the starting point of the Indian public sector banks specifically is that they are very weakly capitalized. So the fact that in some sense there is a forbearance being given on the capital levels is a credit negative.
Regulatory capital requirement that has been prescribed by RBI, that is 1% higher than the global requirements. And even with this 0.625% reduction, we will still be 0.375% higher than the global regulatory capital requirement. And it's just a one-year time frame that the deferral has been made. It's not done away with.
All right, so on that note, let's move on. The Indian government has been making a strong pitch to Fitch Ratings for an upgrade, especially after another rating agency, Moody's, in November 2017 gave India the first sovereign rating upgrade since 2004. To get more perspective on this, Ritu Singh caught up with James McCormack, who and began by asking him about his outlook on India, the risks lying within the emerging market basket, and much more. Listen in.
When we look at big emerging markets, the potential growth rate here in India is by far the strongest. It will grow stronger or faster than China for the foreseeable future. That's something that we expect to continue. That's fundamentally a pretty positive story. That suggests to us that the macro policy framework is a good one. The structural reforms that the government has been involved in initiating are positive and having good economic impact. So all of that is positive. I guess the one big issue that we think about from a sovereign rating perspective is really still the relatively high level of government debt. So when we look at it on a consolidated general government basis, it hasn't really changed much in the last few years, even with the higher growth rates. And if we look at the consolidated general government balance, so the fiscal balance, it's improving for the central government, but deteriorating at the level of the states. So a combined balance hasn't really changed either. So we've got this strong growth story on the one hand, but not really a strong public finance story. And I think those are the things that we have to balance when we think about the rating.
All right, but what do you make of the very public tensions between India's central bank and the elected government on a whole host of issues surrounding regulation of banks? Is that a serious risk from the investor's point of view, the standoff, so to speak, between the government and the regulator?
Well, it's certainly going to get investors' attention, and I think investors are starting now to tune into this story. It's not necessarily something that makes investors entirely comfortable if you've got policymakers in open disagreement with each other. I think we're not really at the stage yet where it's disruptive for international investors, but it is now on the radar screen. And I should say that this is something that we're seeing play out not just in India, but in a number of countries. I think that the discussion between governments and central banks is something that India may be at the forefront of this, in essence, because it's something that we think we're probably going to see more of in 2019. So it is something investors will have to be more comfortable with. I think as long as the debate and the discussion is one that works towards policy solutions and not confrontations, and I think that's what we're seeing in the last couple of days here, then we can be comfortable that, comfortable in the view that policymakers will arrive at a decision that kind of works for everyone.
All right, let me then close by asking you, what will be a trigger for a rating action for India, positive or negative, if you could give us both of those?
Well, I think in both directions, it's really the same issue. It all surrounds public finances. So if it's an increase in government debt from where we are today, that would be potentially problematic, given that the debt level is already relatively high. And I think conversely, if we were confident that the debt profile were going to improve going forward, that would give us some confidence in moving the rating higher, because in terms of the external finances for the country as a whole, which have been getting a lot of attention, not something that really gives us cause for concern.